Why are gig economy taxes so complex for workers? Have you ever wondered why gig economy taxes seem so complicated for those working in this space? Well, let's break it down. Gig workers are classified as independent contractors. This classification changes their tax obligations significantly compared to traditional employees. Unlike employees, gig workers do not have income taxes, Social Security taxes, or Medicare taxes withheld from their paychecks. Instead, they need to track their earnings and calculate their taxable income on their own. This often means making quarterly estimated tax payments. Being self-employed means gig workers have to file additional tax forms. For example, they must use Schedule C to report their business income and expenses. They also need Schedule Southeast to calculate self-employment tax. This tax covers Social Security and Medicare contributions at a rate of 15.3% if their net earnings exceed $400 annually. Many gig workers are not prepared for these responsibilities. The tax process for independent contractors resembles that of small business owners. This involves more complex record-keeping and tax calculations. For instance, gig workers must track their gross income, deduct platform fees, and account for business expenses. They also need to estimate taxes owed without the benefit of employer withholding. Some gig workers may not receive standard tax forms like Form 1099-K if their earnings or transaction numbers fall below certain thresholds. This means they have to rely on information from the platform and their personal records to report their income accurately. The complexity increases with the need to comply with various federal, state, and local tax rules. This includes sales tax reporting and licensing requirements. Since gig workers interact more directly with tax authorities, they face a higher likelihood of audits or notices. This adds to the administrative burden and risk of errors compared to traditional employees. From a demographic perspective, gig economy workers in the United States come from a wide range of ages, income levels, and backgrounds. However, many are younger and may lack financial experience. This lack of experience can make navigating tax rules even more challenging. Practical challenges for gig workers include the time and effort needed to maintain accurate records, calculate quarterly estimated taxes, and understand deductible business expenses. Some proposals suggest mandatory withholding by gig platforms and a standard business deduction. These changes could reduce paperwork and improve compliance, but they have not yet been widely implemented. In summary, gig economy taxes are complex because gig workers must manage their own tax withholding. They also need to comply with small business tax rules, track income and expenses carefully, and navigate a tax system designed primarily for traditional employment. All of this can be quite challenging, especially given the diverse and often financially inexperienced demographic of gig workers in the United States.